Hello, Search Startup community. Amanda Chocko here, Director of Search. I hope that you are all staying healthy and finding peace during this crazy time in our lives. We really miss seeing all of you at our regular Surge events. So until we can meet again, we are moving our programming online, and that's going to consist of virtual mentor office hours, focused founder support groups, and informational and educational video content, which is what brings us here today. I would like to introduce you to Joe Lampen. Joe is the finance director at Wakestream Ventures. And Wakestream Ventures is an early stage venture capital firm based here in Grand Rapids. And Joe is on the front lines with his startups on a regular basis. So he's going to share with us today how Wakestream is helping their startup portfolio weather the COVID storm, and also talk a bit about venture capital landscape at this time. So please welcome Joe Lampen. Hey, Joe.
Hey, how's it going?
Great. How are you doing?
Good. Surviving.
Good.
Thanks for doing this. This I think will be a lot of fun. My name is Joe Lampen. I work for Wakestream. My role is, title is finance director. Role is, the finance side of our firm, but also have portfolio management responsibilities. And so I work with both understanding capital markets and also working with portfolio companies in their businesses and helping them build strategies and manage businesses. So Wakestream Ventures is, as Amanda said, an early stage venture fund. Specifically, we invest in seed stage and Series A stage companies and are looking for companies in technology, typically that have either a proven product with a little revenue or post revenue. And so we're investing in companies usually with 5 to 10 employees but the location is not necessarily specific to Michigan. The majority of our portfolio is in the Midwest, but we invest in companies across the United States.
Cool. So, and how many companies do you currently have in your portfolio?
We currently manage a portfolio of, I believe the number is 60 portfolio companies.
And how many of those are here in West Michigan?
That's a good question. I think the last time I did the math, I think about 40% of those companies are in West Michigan.
Okay, cool. And then they're just kind of scattered throughout the states, or do you have them in certain cities?
The concentration, follows density. So we have Grand Rapids, Ann Arbor, Detroit area, and then a couple of companies in the Traverse City area.
Awesome. Great. So tell us, I know that it's crazy right now. So what is the VC world looking like at this moment?
Yeah, so there was a pretty influential video that came out. One of the general partners of Drive Capital produced a video about 3 weeks ago, and I think we can post a link to that, at some point here. But it was pretty influential in how VCs have been behaving over the last 3 weeks, and how I expect them to continue to behave over the next month for sure, into the future. And a lot of that is working very feverishly with their portfolio companies and understanding where their cash positions are and helping them assess potential downside risk, remodeling and forecasting revenues, and trying to, so the joys of technology. Sorry about that. I don't know if you guys heard that on your end, but I had somebody calling me.
I didn't hear it.
Oh, I had somebody calling me. Well, that's good to know. And so trying to stress test the portfolio to understand which of our portfolio companies are going to need cash. And the general guidelines that we're working with are figuring out after stress testing revenues, and that is reforecasting them to 30% less than what they were last year. And in a startup, that's pretty significant because most startups have revenue forecasts that are, year-on-year multiple growth rate projections. And so cutting them back to 70% of last year's, revenue is pretty drastic. But then understanding what impact that has on cash, and helping companies figure out how to right size or structure the organization to be prepared to manage through 12 to 18 months with cash on hand, or to the extent that they don't have cash on hand, those are the companies that are going to need to come up with an alternative, financing structure or whatever. And so what we're seeing in the VC world is that unless you had a deal that was pretty much, built to close within the last 3 weeks, we're seeing deals get delayed. Not always, but a lot of them. We're also seeing VCs not taking a lot of new meetings right now. They're holding off for a month, or at least maybe taking an intro, but wanting to, being very clear that they may not be making a lot of new investments until they're able to evaluate the cash needs of their portfolio, and then working with their portfolio companies and structuring where needed new investments into those portfolio companies so that they can have enough cash on hand to survive that 12 to 18 months. And I don't think that anybody's looking at this and trying to project that we're going to be in this for 12 to 18 months. It's really more about what potential economic impact this is going to have on, on everyone, and realizing that even if this is short-lived, it's going to have a longer tail on it that's going to need to be covered. So that's kind of what we're seeing. Pricing on those rounds have also been impacted. If you think about it, the stock market has taken a pretty heavy hit, and so the valuations on publicly traded companies have come down. And that is very quickly being transmitted through venture round pricing as well. So even the companies that are showing a lot of promise, and also garnering interest from inside investors to raise capital, the price, the valuations on those companies have come down to reflect the current market risk. So all that to say, there are some exceptions. Anything that's, if you've been watching the public markets, and if you've watched Zoom, for example, the price on, those shares have skyrocketed. So in the startup world, because a lot of those companies are technology related, and a lot of them allow, for people to work and play and learn remotely, there are a lot of places that are being turbocharged. So pretty much anything in the telehealth space has been turbocharged, and there's a lot of VCs who are still active, and they're looking for those opportunities where they may have been seeing a slower market adoption rate in the past. They're obviously now seeing that be accelerated. And then, like I said, anything that is allowing people to do some of the things that they normally would do together socially, but be able to do that from their home, or do it from a remote location. Those types of technologies are being accelerated. So AR, VR, I think, is one place that's kind of really interesting. But a lot of software companies that allow people to do their activities from home are being pushed as well. So those companies are still finding good access to capital.
So do you think that it's a trend for now, or like going forward, do you suggest that founders start thinking about those market opportunities and just this new potential normal that we're living in, that they should start thinking about ways to innovate in those areas and shift away from some of the, I guess, opportunities that would have been more crowd focused, or where people are going to like continue to have social distancing and move to online and virtual and deliveries and all the things. Is that, as a venture capitalist, are you looking for those opportunities going forward, or do you think things will kind of go back to normal?
Yeah, so that's a really good question. I don't think we'll see this. I don't think we're going to go back to normal. But that's being, that I'm not saying that we're going to continue in this fashion, or that we're going to, all of a sudden end up, in a drastically different, social environment than what we were used to. Any type of crisis, whether it's the financial crisis, or if it was, terrorist attacks from 9/11, or, even go back to the dot-com bubble, and burst in the early 2000s, all of these events do change behavior. But some of them are just very subtly changed. So I think you hit on a couple of really good ones that will remain to be seen on whether or not, delivery from restaurants becomes, a much bigger thing than it was. That was a technology and enablement, platform that had existed before this. It was growing, but maybe struggling to find real strong legs. And maybe this is just what it needs to turbocharge that. I think that people, by nature, my just opinion is that people are going to eventually gravitate towards, social events, large social events, and be comfortable with it again. But they're probably going to be taking different precautions. And along with that, there's going to be, new behaviors and new things that they do. It may become more popular. I don't know, be popular, but more socially acceptable in the United States to be wearing masks at public events. You're, I think, going to see a, much higher emphasis on hand sanitizer, everywhere. And businesses and, events and, places where people congregate are going to take cleanliness a lot, more serious. I think those types of things are going to happen. I think the teleconferencing thing, I think that could potentially change business dynamics. That, for a lot of us who have been able to work fairly effectively and efficiently from home, we're going to realize that maybe all the travel isn't necessary. Could potentially change travel budgets for companies. It could also change the real estate market for companies. So I think the biggest thing is, I wouldn't suggest that any company necessarily move away from their core business if that's been successful. But pay attention to the gaps in places, as we're doing this mass, work from home experiment and learn from home experiment, figure out how your technology might be able to fill in some of those, problem areas where things don't work as well. One of the things that I'm seeing already that's kind of interesting, if you watch a lot of the news happening, and all the newscasters and, personalities are working from home and working remotely. The one thing that, may not be apparent is that you've got a whole audiovisual crew that has to, like, pull all that together. And there may be new audiovisual technologies that come out of this to be able to pull in, seamless data and media feeds from a lot of different places. Just, one small example of how, somebody might come up with, I mean, Zoom came out of, the financial crisis because people were, working from all over the place.
Yeah.
So.
Yeah. And, obviously they're struggling with some privacy issues right now. So that'll probably be another area to innovate in.
Yep. So there's this kind of momentum and shift towards, I called it distributed workforce. And so companies that kind of came out of, 9/11 and more recently the, financial crisis were ways for people to work remotely. And if you think about like Dropbox, DocuSign, Zoom, and Slack, so all of those technologies that enable people to work from wherever they're at, help them be more efficient. Those types of technologies and new ones that will that emerge that are going to assist, kind of a more distributed network of both employees and, friends and family and all that kind of stuff. I think those are definitely things that are going to have a lot of legs after this.
Yeah, sure. Great. So anything else on your portfolio companies that you want to share? Do you have any examples of how any companies were able to pivot or really find an opportunity? I know you might not be able to name companies, but
Yeah.
any examples of that?
Yeah. So, specifically have been working with portfolio companies that I, am responsible for and have a lot of engagement with, working through, like the steps that I mentioned earlier about evaluating cash and trying to manage that as well as possible. Trying to figure out with them how to shift capital reserves to support the cash needs of our portfolio. So, and that's more, I think, within our portfolio that I'm helping my team figure out where we need to be, deploying cash. So I'm working with my companies that I'm responsible for in evaluating their cash needs, and then helping my teammates, evaluate that portfolio wide so that we can reevaluate where our cash reserves need to be redeployed. We've got a couple of portfolio companies where this has, obviously been detrimental. We've got physical goods, or we've got a company that does physical space monitoring and helps like large event spaces understand where traffic flow is happening. Obviously, that's taken a hit, but also has provided them new opportunities on their analytics and software side that they didn't that they hadn't pursued before. We've got a couple of portfolio companies that are in this distributed space that are being supercharged and now finding all kinds of new partnership opportunities because the marketplace did not have a product that would help, for example, youth sports, youth athletes to get continued coaching, for example. This technology company has got a platform that helps connect kids with their coaches and helps the coaches distribute their training programs. And so we're taking each portfolio company one by one and just figuring out exactly what their needs are, where their opportunities lie, and trying to think beyond this current environment, realizing we don't yet know exactly how everything's going to play out, but knowing that if it was a good, strong technology company before we went into this, chances are it's going to be a good, strong technology company, once we get past it.
Cool. So I quite often speak with startups that are about to start raising capital. And I even know of a few that were going to begin in the last month or so. Would it be better for them to just hold off until the storm blows over, or should they still connect with investors and start building those relationships during this time?
Yeah. Well, it depends on what their cash circumstances are. The first obvious answer is if they need cash, then they need to be raising cash, and they need to be raising investment and raising capital, and whether or not they need to go to their current investors and explaining them what's going on. And that's another piece that I highly recommend, that if you've got investors already, if you're not right now, be talking with them every week. At least give them information every week, even if you're not getting a response from all of them, but communicate with them every week. Communicate whether or not you need cash. If that's not the case, and you're just going to go and raise cash, I still think it's a good idea to reach out to investors and at least introduce yourself. Because I think after the first, these first few weeks, I think there's going to be some time that opens up. There's going to be kind of a continual, crisis management program going on within each of the funds. But I think that there will be some time that opens up. And as long as you're presenting yourself as, hey, here's some information on the company, here's what we were doing. We're obviously all, in a state of flux, but we do look to raise capital once this is over, and would love to set up meetings, either now just to introduce ourselves with no expectations that you'd, be interested in investing right now, or set them up and get them on the calendar in a month or two. But I do think it's if you have the time, I think it's still worth sending some feelers out. And your best opportunities are going to be with funds that you may have had conversations with in the past, but at that time they may have chosen to pass. But company firms that are at least somewhat familiar with your business, I think you've got the highest likelihood of giving updates and getting an opportunity to have a conversation.
Awesome. Cool. So what about you? I mean, what opportunities are you observing yourself just in general right now?
Yeah. Well, so, at the very beginning of this, once it became apparent that there was going to be a massive shift and our lives were going to change dramatically, I just set out to, on a frequent basis, observe and step, back and try and really pay attention to the things that were working well, things that aren't working, see when, observe people. That's one of the most, fascinating things in the world in my mind anyway, but really take an opportunity to observe people's behaviors and what they were saying and how they're feeling and what they were doing. And I think there's a couple of things that I've noticed that have changed a little bit. Number one, a lot more people are being physically active, getting out, taking walks, and all that kind of stuff. In the state of Michigan, if you aren't an outdoors person or weren't an outdoors person, I've noticed many of you have now become outdoors people because the parks are packed, which has been great, with the exception that they have now become almost problem areas for landowners that they've got to now monitor and make sure that everybody's following the rules. But outdoor activity is up. I think that's kind of interesting. I know that it's just like January. Gym memberships are up. I have belief that it's not going to stay that way forever, but I do believe that there will be more interest in getting outside. And I believe in that for a couple of reasons. I think this particular crisis that we're going through is one where, at least I've thought of this before, but in making healthy lifestyle choices, it doesn't make you immune from the virus, but it does actually, help you if you were to get sick or avoid, becoming very ill. And I think that could potentially shift consumer, sentiment or behavior in, making sure that they're electing healthy lifestyles, especially to control things that they can control. Obviously, things that you can't. But I think that's potentially an outcome out of this. I also think that mental wellness is becoming much more socially acceptable to talk about. A lot more people are talking about it, and so we've been looking at the mental wellness space for a few years, and that has also, similar to telemedicine, has been maybe a slower adoption rate than we would have anticipated. And I think that through this, I think there's going to be a lot more openness and conversation around what does mental wellness mean, and are we active in it? I think in the past, a lot of the conversation came up because we're trying to avoid the most severe happenings of mental wellness. We've kind of pegged the mental wellness issue on a lot of the mass shootings and those major and suicides and those types of things, and it's been technology that's been brought up to avoid those things. But I also think that through this, we're starting to now see an opportunity and a reason that people should be paying attention to mental wellness to improve and enhance, the good decisions and good behaviors that we want. So I think that's a trend that I think comes out of this. But otherwise, just continuing to observe this mass work from home and mass learn from home and understand what's working and what's not. Inevitably, there will be technologies that nobody was using that they've had to use now that they'll bring back into their workforce and into their school system. And there will be things that just simply didn't allow work from home and learn from home to work that I think will create new business opportunities, whether it's to help leverage, people's time and make them more effective and efficient, or if it's just to be, help them do it better.
Yeah, absolutely. I think, in general, the education system and the healthcare system were prime for innovation. So this just might have been a catalyst to get it there and get out
Yeah.
of the always doing it the same way mindset.
Yep. And I think, and there was a lot of reasons why they were able to do that. And there may be, some still resistance to it, but I think that there's, I think there's maybe a bit more openness to discover there. One of the other things I failed to mention I thought was kind of interesting is through this whole process, I do feel like at both the state and national levels, businesses took a much more prominent leadership role in getting ahead of this whole thing. And, there's been a lot of critical thinking and words kind of thrown at corporates, and their behavior and how and so it's kind of interesting that, the a lot of the major, not all of them, but a lot of major corporations in the country have kind of come to the rescue or have like led, with their behavior. And I'm interested to know if that confidence in corporate leadership and corporate behavior is if that shifts over the next couple of years.
Yeah. I mean, even here on a local level, just retooling and reshifting production to focus on PPEs and health and, coming to the rescue, so to speak, for those needs. So we're really lucky here that we have a really strong, corporate environment where those companies are willing to do that and have the ability to do it.
Yeah. Yeah. With what and I don't know how much of this ties back to that, but I think it was either last year or the year before, there was a corporate responsibility code document that had been circulated. There's a group, I forget if it's like 150 of the country's largest corporations that get together and they talk about corporate responsibility. And there was a shift for the first time in a long time. There was a change. They changed the document, and in that document, they started to include more conversation around how they have social responsibility, and it's not just responsibility to shareholders. And it was interesting, even though most of the CEOs that were part of that group signed it at the time, there was still a lot of commentary and a lot of pushback on changing that's not their responsibility and their role. But I kind of think that you're seeing that play out right now and seeing how powerful that can be.
Yeah, absolutely. Great. So just really want to thank you for taking the time to speak with the Surge community today. And this will be put out on a Facebook watch party. So we're going to let people know that they can join us. And we thank you for being there so you can answer any questions that people may have. And just take care of yourself and your family. And we'll talk again soon.
Absolutely. I'm going to enjoy time in the woods. And we're going to stay home and stay safe.
Okay. I see you're already in the woods. That's really
Yeah. Yeah. Well, the funny things you do when you have to work from home. Amanda, I don't know that you've commented on this already, but one of the other things that we've had to learn how to do is do haircuts, and we didn't learn how to do it all that well. And so I had to kind of zip it down because it just wasn't working.
well, I don't have that option, unfortunately.
Yeah. So I'm kind of anxious for the next couple of months to let the hair grow back out and get a
and the roots
haircut again. Yeah.
Oh well. It's a low price to pay right now,
Totally.
I guess, with everything else.
You know what? That's the fun part about hair. It just keeps growing.
Yeah, it's only hair.
Yeah.
Cool. Well, thanks again, Joe. Take care.
Yeah, you too.
Bye-bye.